Welcome back. Well, we've laid out market setup for you. We told you how the global action is panning out, as well as listed all the top stocks you need to track. Let's get a little more in-depth now. Prakash Diwan joins us to help us out with some fundamental analysis. Hi, Prakash. Morning. Hope you had a good weekend. Well, Prakash, let's focus on a couple of names. And I want to ask you about Oberoi Realty. Last week the stock was buzzing. We know that they got a strong hold here in Mumbai, but now they're looking at other markets. How do you view this piece of news?
Good morning, Nigel. I think, it's a very clear strategy towards smart capital allocation. What they've done is the successful launch of some of their marquee projects here in Mumbai. They've monetized that pretty well and timely. And if you see the average realization, they're probably one of the most superior in the industry today, for that particular location and geography. And what they're doing is they're utilizing that to enhance their reach in some of the premium markets. Better premium market than Gurgaon for that matter. And Gurgaon is something which has been attracting a lot of attention, given the fact that there's still enough appetite to be able to absorb those kind of pricing. And it's a very clearly a high-end market which doesn't need too much of units to sell, but your margins, your realization, and your asset turn is much more superior. So this is going to very clearly help them do that, because I don't think that too many parcels available in Mumbai for them to really keep maintaining that kind of an average ticket size. So that's very clearly the strategy. We've seen some of the other projects which have been announced recently also indicate the same kind of a mindset. So I think it's very positive. But of course, the stock has already priced in quite a bit of all the salience from the Mumbai project. So don't expect fireworks just on the basis of this, but this sets the optionality for the next 12, 18 months for the stock to kind of be maintained at superior valuations.
Okay. Prakash, hi, good morning. So this is a week full of IPOs, right? And I think all eyes will be on the Tata Technology IPO. It opens on Wednesday. It's the first one from the Tata Group in, I think, 20 years. So your thoughts, would you subscribe to this? Would you avoid it?
Good morning, Sonia. So you got Rima sitting next to you. I'm sure she has enough to add on that. But I think Tata Tech as an IPO is first and foremost is available at it's being offered at a price which is far lesser than what the unlisted market was indicating till a few months back. So that has kind of added to the attractiveness of sorts. In addition to the fact that it's the first Tata IPO after a long time. But remember one thing: this is a business which is going to be slightly different in terms of scaling up. It's not like what Tata Elxsi or a TCS could probably do. This is more akin to the ER&D kind of businesses that a KPIT specializes in. And that's exactly why it was always housed in Tata Motors, right? So it has its salience. It's going to be kind of be able to build further from here on and go beyond just a captive kind of a segment that it has been catering to. But, allotments in these IPOs is going to be a very tough challenge. I would look at it or re-look at it post-listing rather than listing. I know there could be some attempt at getting some allotments given the fact that, there's always a chance, but it's more of a lottery ticket kind of a thing at this point in time. But from a long-term perspective, once it gets listed and if it's not over the top, you definitely should have it on your portfolio. The other IPOs are far more interesting in terms of, ability to get some allotments and buy in, for example, Irida. So if you, look at that, I think that's far more promising from a long-term perspective, given the fact that they are way ahead in renewables than anybody else. And what PFC, REC have demonstrated in the last, 12, 18 months, the renewable portfolio is growing at a scorching pace. And then there will always be a gap that needs to be filled up, which renewables will suffice. And Irida could probably grow from here on. It's being available at one-time book at 8,200 crores market cap, wherever it is. So you have ample room for growth in the long term. So this is going to be something like some of the railway stocks, which came were not very attractive looking at the point. They came with an IPO, let's say, let's say an IRFC. But then, subsequently people realize the salience from a long-term perspective. So this could probably be one of the better ones.
Just a word on Tata Tech's valuations. At the upper end, Tata Tech is going to be valued at 32 times FY23. Its closest peer is KPIT Tech. Now, it's an ER&D company, right? So you have other peers like Tata Elxsi, L&T Technology signed also, but its closest peer is KPIT Tech, because KPIT Tech is also pure play automotive. 100% of its revenues comes in from the automotive vertical, while for for Tata Tech, it's about 70% of its revenues are from the automotive segment, and in that 30 to 40% of its revenues are from the two anchor clients, which are Tata Motors and GLR. So that's one thing. Now, in terms of valuations, Tata Tech is going to be valued at 32 times FY23 PE, last year's number. In comparison, KPIT Tech is going to be more than 80 times. Yeah. So in that context, the valuations are reasonable. But as Prakash pointed out, that the question is, are you going to get any allotment? And about 10% is going to be reserved for the Tata Motors employees itself this time around. Prakash, wanted to get your thoughts in on the hardware PLI scheme, which was announced by Ashwini Vaishnav over the weekend. There are companies like Syrma, SGS, ITI, NetWeb has also been selected. And this scheme is going to help making laptops, PCs, servers. So another push towards getting hardware manufactured in India and making India a big player in hardware, not just in services. Your thoughts on this entire PLI scheme which has been announced for hardware?
So good morning, Rima. So I think it's extremely well timed. The government has been attempting to do this since almost middle of this year. When they started with that import ban and then relaunched that PLI. But the fact that now you have so many takers and wanting to participate means that probably the ecosystem is about to get established. We've seen that on the smartphone side. The same thing you could have 1 year down the line. We'll be talking about how much contribution these companies have started doing towards the supply of PCs and laptops in India. But remember, most of the players, very few of them are listed, as some of them you pointed out. It's very fragmented as a market right now. So for us, from a stock market perspective, there might not be much of a play, except for a company like Optimus or something, which has been into it for quite some time, and people love that name. It's not a recommendation, just to let you know, but the point is that there will be very few players which will start kind of sparkling out of this PLI list. But it will change the way some of the other businesses will pan out. So, what I'm looking at is anybody who's into recycling of hardware eventually will also have a place under the sun, for the simple reason that the supply is going to be very domestic. The component ecosystem will be very domestic and integrated. So you could look at those things subsequently. But at this point, I don't think it's going to impact specific stocks from the listed space.
Okay, Prakash, any thoughts on how to approach some of these other big developments that have taken place, like IT stocks, for example, right? There's been a decent run-up that we've seen in the last couple of days. The bond yields have cooled off. There's not as much fear of a recession now as there was, say, perhaps 6 months ago. Would you buy any of these IT names?
So, Sonia, while the macros, the softness in the macros or the improvement in the macros is kind of been extrapolated on the IT sector as a whole, I think it's too early to call out whether the revival is going to be imminent. And to be honest, come January, February, you'll start seeing a little bit of renewal of contracts, or the nature of renewal of contracts coming through, and then everything will start kind of falling in place. My conversations with people in the US in the IT business, not on the market side, but on the IT business, do indicate that there is caution that's still there, because everybody is not very sure of whether this data that's come through on the US economy is very resilient. So let's wait for that. I think Jan will be a very good time to assess whether there's going to be a revival. But there is a very strong feeling, while Jeffries and all have cautioned us on some sort of a difficulty in terms of meeting the expectations being built up. But my sense is you could probably see a revival that could be imminent from April onwards, March, April, and that's the time to kind of start preparing. And that could probably be well timed with the correction in the market because of the election expectation also. So I would give it a little bit of time before buying in.
Prakash Diwan is still with us. Well, Prakash, I wanted to ask you about what are you making of some of these ferrous stocks. We've seen some of them correct a little bit from the top. The problem now is that domestic prices are at a premium in comparison to Chinese prices. How do you see things panning out?
No, so it's a fairly inverted kind of a price chart for sure. But what's going to work in favor of most of the Indian players is going to be their ability to not just keep the supply side intact with captive mines and processes which are in place, but also make sure that they have the efficiencies being built in. So from that perspective, if you look at a very simple name like Sandur Manganese, the fact that they have enough of a captive mine capacity and the fact that they could probably also in the near future look at some sort of pelletization to improve their yields and all, will make sure that the efficiency, the cost efficiencies of the production are in place. But otherwise, it's going to be largely a play for most of the larger players, Nigel. And you track them so closely, the likes of JSPL and JSW. That's where efficiencies will probably help. I don't see a very quick turnaround in situation in the Chinese pricing, because they've been dumping all over the place, whatever excess they've been making. And I think it's just keeping a lid because of the hope that some sort of a revival to, the exports to the US from China might kind of start improving. So that's the only reason why, there is some sort of a underlying buoyancy. But otherwise, I think it's all well priced in terms of whatever we've seen. But the bigger players are what you could play if you are looking at slightly longer term view on the steel side. But there's nothing very exciting, as I said, except for the ones which are smaller players like Godavari and, smaller is relative to the GSPLs and Tata Steel of the world,
Got it.
or the Sandur Manganeses of the world.